Hi everyone. So today we are going to discuss the case of Harris Scarfe Collapse. So our group member includes myself Satwinder, Manpreet, Amanpreet, Harman and Harpreet. So let's discuss about this case. So we'll begin with introduction. So in this topic we are going to discuss an analysis of the auditing and accounting issues happened between the Harris Scarfe and auditing firms Ernst & Young and PwC. So there was a dispute between Harris Scarfe and the auditing firms that we are going to discuss this. So in this topic we are going to provide a brief discussion about the facts and events behind this case, what happens actually in this case. So it discusses the relevant issues and auditing and accounting firm. It concludes in the end like recommendation and possible solutions, how we can avoid such cases in future, so that we can take some preventive and proactive actions. So the next is case description. We'll see the case description, what happened, like an overview. The Harris Scarfe Limited has experienced one of the largest loss in the history of Australia with a debt of 265 million. Bruce Carter, who was the actual receiver of Ferrier Hodgson, decided to sue the audit firms because if Bruce Carter, they believed that the auditing firms, they didn't do the job well, so they decided to sue the auditing firms because of the audit they had to suffer a loss, so they decided to sue them. And the Bruce Carter, they filed a lawsuit against the auditing firms for 220 million in damages. Against the loss, they asked for 220 million. Later on, the Ernst & Young, they settled with Mr. Carter out of the court settlement line, while the PwC ended in a court facing for claims for remaining 180 million damages. So Ernst & Young, they settled with Mr. Carter, like out of court settlement, and the PwC, they ended paying up 180 million in damages. So the further topic will be discussed by team member Manpreet. Thank you.
This is Manpreet Kaur and I am going to talk about culpabilities of parties and relevant issues in auditing and accounting. First of all, I am going to talk about claimant argued that if the audit firm PwC had done its work properly, the auditor would have uncovered the systematic fraud in company. But those fraudulent activities were conducted by Allen and CFO at Harris, who later failed for dishonesty offenses, but still company continued its operations despite the ongoing fraud. Secondly, annual profit statements were found to be manipulated, so auditors of PwC should have detected the fraud and alerted the board of directors. Because of this failure of PwC, Harris Scarfe directors continued to conduct the company's affairs while lying on the accounts. Next thing is relevant issues. So, falsification of accounts at Harris Scarfe was going on more than 5 years. Earlier, it was easy for the CFO to alter the some book entries to just show the stock and also to hide the profit of the company. But now, Harris was forced to maintain a fraudulent set of company books to present the high profit than the actual value. So in this case, both the management and the audit firms failed in their duties. So next concept is going discuss Aman. Thank you.
As my friend Manpreet discussed about the relevant issues in auditing and the accounting, so further myself Amanpreet Singh is just going to discuss about the root causes of the issues. As the companies are required to have the effective internal controls, mechanics to prevent all kinds of fraud, it's the responsibility of all the companies that they should have the various rules so that they can prevent the fraud easily. With the internal controls, companies can identify risk and ensure that relevant laws and the regulations are followed in the record keeping. Thirdly, the internal auditors and accountants should also work independently with the company. So at the last, we are going to discuss about the external auditors should also ascertain the effectiveness of the internal control of the company. Furthermore, I'm going to discuss about the audit committee. First of all, the audit committee reviews the financial information that will be presented to the shareholders and the stakeholders. This is the most and the first point that each and every company should have. Secondly, the audit committee also selects the external auditors and defines the scope of services to be performed by external auditor. This is also the main point to be taken in the company, as each auditor committee also selects the external auditors. So thirdly, audit committee at the Harris Scarfe between 1998 and 2000 comprised of 3 members, that is executive, chairman, CFO and the independent director. And the last, the company board of the director have a primary role to ensure the control environment that protects against fraud and the financial impurities in the company. So further, my team member Harman is just going to discuss about the corporate governance. Thank you.
My name is Harman and I'm going to explain corporate governance at Harris Scarfe. Firstly, high profit presented by management that result in their business failure. Secondly, management at Harris Scarfe mislead its stakeholder by showing false declaration of profits in their financial statement. And third thing is conflicts of interest. Misrepresentation of profits in financial statement need to be deducted by its audit committee, board of director, internal audit, but they fail to do so because they have self-interest in the company. Coming on ethical issue, first one is auditor independence. There is a contractual relationship between company and auditor to not disclose higher amount of profit shown in financial statement, which remains doubt on real independence of auditor. Second one is non-audit work. Harris Scarfe paid PWS a higher amount for non-audit work, which listed in financial statement as other services without any explanation, which raises questions about integrity of audit firm, which breach Australian new audit independent standard. Third one is breach of duty of care. Auditors owe a duty of care to the public, trust and faith in the work of accountant and auditor. And next, Harp is going to explain.
Okay, as my all group members described about this presentation, now I am going to pull the shutters down by explaining the legal liabilities and conclusions. After that, the recommendations which can be recommended to the company. So let's start with the legal liabilities. So auditors can face both type of changes, like criminal and civil. In case of criminal, it occurs when anyone misconduct the government rule, means whatever the rules are applied or conducted by the government, it can be misconducted and occurs as a criminal law. After that, this case can be further brought to the state level, state civil liability. In case of Harris Scarfe, its very weak financial positions, which was revealed by the auditors Ernst and the Young, and later it was conducted by the PricewaterhouseCoopers. The auditors face legal liabilities if fail to perform their functions. And in Australia, top accounting professionals bodies are CPAA, which is Certified Practicing Accountant Australia, and the second one is ICAA, which is Institute of Chartered Accountant Australia. Further continuing this same, the previous both showed concerns about issues of liability of auditor plus cases brought against them. And if come to last, the smaller firms which lead to bankruptcy if any big claim brought against them. In the end, the conclusion of all the presentation is the lawsuit, which can be also called as a complaint by Bruce Carter of Farrier Hodgson, claim that found occurred at Harris Scarfe under its auditors, and both management and audit firms failed their duties. Management came in fraudulent financial reporting and to hide company's financial problems. In the end, the recommendations for the company of is audit committee to have independent directors only. This will give them freedom to work freely away from influence by the management and non-independent directors. And the last, with internal controls companies and identify risks to ensure that relevant laws and regulations are followed in record keeping. That comes to the end of a presentation. Thank you.